Hey everybody, this is Jim at SP500chart.com. It's Sunday afternoon, a little bit after 3, and we're going to take a look at the S&P 500, see what happened on the 19th, Friday, and also take a look at the week in general and where we may be in the intermediate, short-term, and even long-term scheme of things. Before we take a look, I need to remind you as always that the website and the video are for educational purposes only. Nothing stated in the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you need to make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, starting off looking at a 30-minute chart, just want to show you a couple things that are important. This is the long-term, well, call it long-term. This is the intermediate-term bull channel that goes all the way back to, on a daily chart, goes all the way back here to November of 2012. Can't quite see that on an hourly chart, but then it was tagged again in March. Let's look at a 2-hour chart. I have to scoot this line though. So here's our touch in November. Here's a touch in late December. A touch again in late, or rather very early March, late February. We had another touch in early April, and now we've broken that line. With that line now broken by a technically significant amount, we should be expecting this line to serve as resistance. Okay, so let's see if that is indeed what we see happen going forward into the next week. As far as how the week panned out, well, you know, I had a sense that we were likely going to take out this line fairly quickly, and then there were two reasons why. One, it had been around about as long as any intermediate bull trend that we've seen in the past 4 years. That's reason number one. Reason number two, the bounce that took place right here came up really in a furious buying spree, hit a little bit shorter term resistance line, this black line right here, then immediately started to sell down. The second thing, or rather a third thing really, is the fact that what formed prior to that move was starting to look like a bear, kind of an ascending wedge shape. Now, in all honesty, it was not in the right place in a chart for us to call that, quote, a bear flag, because bear flags happen after a downward trend. But sometimes we see these last moves that the market can make. I've seen it before, and you have too, where you get this wedge-shaped thing. And what's interesting to note, if you look at where the wedge apex is, in other words, here's our trading right here, and here's our apex. If you look at where that apex is, it is amazing how often that is at an area that is technically significant. So at least for right now, this 2 weeks of trading kind of projected out to just under 1600 as a technically important area, and there we get up to about almost 1600 and start to sell back down. Now, I've got to make this video kind of short. So this past week, no surprises. We were expecting, we knew to look for a potential breakdown of this lower line, and we figured all along that once we got up close to 1600, we should start to see things weaken. And so far, that has been true. Now, with this line broken, we now look to this to be resistance. So it's not to say that the market can't go up, because this line is going up. As a matter of fact, within 3 weeks or 4 weeks, the S&P could be at an all-time high, and we still have not gotten over this line. I'm not saying that's going to happen. I'm just saying it can happen. What I'm rather expecting at this point, though, is the same thing that we've seen in each of these intermediate bull runs that we've had over the past 4 years. And that is, they run for anywhere from 4.5 to 5.5 months. The channel breaks. We form a topping pattern. That topping pattern breaks down. We satisfy that pattern's downside objective. And so far, the result has been a reversal, and then the market comes back. But where we are now, I would want to see some real significant evidence of a strong reversal before I bought the next intermediate bottom. And my thinking is very simple, and I'm going to share this with you, then get out of the way and let you think about it. First off, I see a potential head and shoulders forming right now. And I'll tell you what, let me get rid of this oval. Instead, I'm going to go with a box. So I think that'll show it better. So I'm seeing a potential head and shoulders forming inside this box. This would be a double left shoulder so far, a single head. Let's say we come back and back test this line, then we come back down to 1540 roughly, take that out. What does that mean? Well, if that means if we take that out, then we are looking at a head and shoulders top. And if this is a head and shoulders top, then we're looking at a projected target. If 1540.42 gets taken out, we're looking at a projected target of the high 1480s. So let's pretend for a second. I'm speaking out of turn here. I'm not making a projection. All I'm saying is this is why I want to watch and be very careful in this particular situation. So let's say this head and shoulders top forms. It breaks down out of this box. I'm making this large enough to where it would be roughly symmetrical. So we break down here and we come down to another expected support line at about 1488. Let's say we get a bounce at 1488, then we come back up to this neckline and we can't take it out again. Then the S&P starts to come down to this line again. What are we dealing with if that is the case? Well, we may be dealing with an even larger head and shoulders pattern. And I mention this not because this is a prediction. I mention this because this is a possibility. So it's something we need to watch for. So if this line were to break, then we would be looking at a minimum downside target of about 1390. If we then back out on our chart to a 3-day chart and we look at 1390, we will see that there is no rising trend line that would support 1390. Did you see what I'm saying there? If all of this adds up to a fairly large head and shoulders top up here, and we get down to 1390, I don't see any rising support line that we could really expect to hold that, except for the possible exception, I take it back, of this light green line right here that would be under 1300, more at about 12. Well, it depends on where it would be met. So all I'm saying is it's been a while since we've seen a significant sell-off. And if we look at this chart on a 9-day chart, look at where we are in relation to the last two major tops. We are right there. So I am now open to the idea that we start to see more significant breakdowns than what we've seen so far. Again, please understand, I'm not saying that that's going to happen. What I am saying is I think it's wise, considering where we are in the chart, where we have just come off of just under 1600 and a brand new high for the S&P 500. I think it's smart to look at where we are. Consider that also back in the fall of 2007, the S&P was hitting all-time highs by about the same margin that we've been hitting them here lately. And I'm just saying, be aware, be alert, because this is a prime candidate spot for things to start to break down in a more serious way. So like I said, going forth into this week, however, we've got something that we can kind of gear on, and that is, since we do have a series of tops that have formed over the past week and a half or so, I think we can look at those tops and we could say, if and when this line right here breaks, then I would expect that to set up a rally to come up and test this broken yellow support line. When we get up to this broken yellow support line, if you are an adventurous type and you want to go ahead and start some short positions, and especially if we were to tag that around 1570 and then start to look a little weak, that could be the formation of a right shoulder rally. That could be a good spot. So, but for right now, if this line breaks, look for a rally. If this line breaks, if 1540 were to break, then look for more serious selling pressure. But I'm really not expecting that. At least not yet. Eventually, yes, but not yet. So guys, there you have it. There's your video for April 21st, 2013. Thank you for taking time out of your day to watch this, and especially thank you for your support. If you're a subscriber, I want to say it. If you're not a subscriber, now might be a good time to think about it, because the S&P and the other broader index markets are coming up upon territory where critical things could be in store for the upcoming months to a year. And so just think about it. Thanks for watching. Take care.